G'day legends, welcome back to the channel. I am your host Gold Jumper and we have a proper wild one for you today. Jump up and under, let's get into it, because the markets have been more unpredictable than a magpie in nesting season. We are breaking down the absolute heart stopper of a gold crash that saw us dip to $4,000 and then bounce back. We'll look at the $500 million oil bets placed just minutes before Trump's big tweet and how the tech giants are holding up. Then we'll dive into the charts to see if the technical indicators are telling us to buckle up for a moon mission or another slide. Now, just a quick reminder that I'm just a bloke with some charts. This isn't financial advice, so don't go betting the house without doing your own research. So, the big question for today is simple. Has gold finally found its bottom, or are we just in the eye of a massive financial cyclone? Let me know what you reckon in the comments below, and while you're down there, smash that like button and subscribe to join the crew. Don't sweat the dip, legends. Just more room in the pouch. And Struth, did we see a dip to start this week or what? On Monday, March 23rd, gold did something that left most traders staring at their screens like a stunned mullet. The yellow metal plunged to an intraday low of $4,098.87, which is a 4-month low point. This was gold's worst weekly performance in over 40 years, falling 20% from that high of $5,400 in January. It felt like the sky was falling. But by March 25th, we've seen a bit of a recovery back up to $4,468. This recovery is a real ripper for those who didn't panic, but the volatility is still high enough to give you a grey hair or two. We are seeing a tug of war between safe haven demand and a massive sell-off from the big institutional players who are looking for cash. The market is basically trying to figure out if the war risks are baked in or if we're about to see another massive leg down. It's been a proper roller coaster, but gold is currently holding steady around that $4,470 mark as we speak. Keep your eyes on the screen because this recovery is looking a bit fragile, like a house of cards in a southerly buster. Now, let's talk about why this crash happened, because it wasn't just the small fish getting spooked in the pond. We saw a massive institutional sell-off where the big banks and hedge funds were dumping gold faster than a hot potato. Roughly 62 metric tons of gold were liquidated through exchange-traded funds in the month of March alone. The big dogs are worried about stagflation, which is that nasty mix of slow economic growth and prices going up like a rocket. Instead of gold being the safe haven, everyone rushed into the US dollar because it's still the king of the mountain during a crisis. US Treasury yields also spiked up, which makes holding gold a bit of a tough sell since it doesn't pay any interest. When those real yields go up, gold usually takes a bruising, and that's exactly what we saw play out on Monday and Tuesday. It was a massive flush out of the leveraged positions, and plenty of traders got a gur moment as their accounts went into the red. But remember, when the big institutions sell, it often creates a buy the dip opportunity for the legends who have a longer-term view. The long-term case for gold is still there, but the short-term pain was definitely enough to make even the bravest trader sweat. Now, hold on to your hats, because we've found some absolutely sus trading activity that happened right before the market moved. On Monday, March 23rd, someone placed a bet worth over $500 million on oil and gas prices. This happened only 15 minutes before President Trump posted a major update about a 5-day delay in military strikes. Not only that, but a mystery bet worth $1.5 billion was placed on S&P 500 futures at the same time. It's enough to make you think someone had a crystal ball, or maybe just a direct line to the White House Truth Social feed. These traders sold oil at the high and bought stocks at the low right before the news hit and the markets flipped. It's caused a massive stir in the markets, with people calling out mind-blowing corruption on social media and across the news. When you see $1 billion move 5 minutes before a tweet, you know the game is rigged for the big end of town. These mystery bets were perfectly timed to profit from the sudden de-escalation in the Middle East that sent oil prices tumbling. It's a classic case of the little guy getting the raw end of the deal while the insiders make a killing on the volatility. Speaking of Trump, his social media feed has basically become the world's most powerful economic indicator this week. He announced a 5-day delay on strikes against Iran's energy infrastructure, which gave the markets a massive sigh of relief. But don't go thinking the drama is over, because that 8-hour ultimatum has just been reset for this coming Friday. The time bomb is still ticking, and everyone is waiting to see if those US Marines and naval vessels arrive in the Gulf. Iran has denied any productive talks are happening, calling the White House news psychological warfare to manipulate the markets. So we're in this weird limbo where one side says peace is coming and the other side is ready for a proper biff. Every time Trump posts an update, the algorithms go haywire and gold starts jumping around like a kangaroo on a hot tin roof. The uncertainty is extreme, and as we know, uncertainty is usually gold's best friend in the long run. But right now, it's just causing massive whipsaws that are cleaning out anyone who is trading with too much leverage. Keep your notifications on, because that's where the real market moves are being decided right now. The oil market has been absolutely mental, with West Texas Intermediate, or WTI, swinging like a gate in the wind. Oil hit a 4-year high on Friday, near $100 a barrel because of the shipping uncertainties in the Strait of Hormuz. Then, as soon as the delay was announced, WTI crude crashed all the way down to $86. That's a massive drop in a very short time, and the OVX, which measures oil volatility, is sitting at historic highs. When oil prices go up, it drives inflation through the roof, which actually hurts gold because it forces central banks to be hawkish. It's what the experts call the oil shock paradox, and it's been a real thorn in the side for gold bugs this month. We also saw some massive strikes on energy plants in Iran's Isfahan region, which kept the supply fears alive and well. Crude oil is basically the master variable for all other assets right now, and gold is just following in its wake. If oil stays above $90, you can bet that inflation fears will keep the pressure on the precious metals. It's a tough environment to navigate, but keeping an eye on those energy flows is the only way to stay ahead of the curve. Let's talk about de-dollarization, because the golden yuan narrative is gaining a lot of steam on the forums lately. The People's Bank of China, or the PBOC, has extended its gold buying streak to 16 consecutive months. They now have over 2,300 tons of the shiny stuff in their vaults, which is 10% of their reserves. There are even rumors going around on Reddit that the US Treasury is paying off debts to China using physical gold. This is part of a massive shift away from the US dollar as nations try to protect themselves from Western sanctions. If the world stops using the greenback as the primary reserve currency, gold is the only asset that can step into that role. Central banks in emerging markets like India, Turkey, and Brazil are all rotating out of fiat and into bullion. They bought over 1,000 metric tons last year, which provides a massive structural floor for gold prices. Even if the price drops in the short term, these big sovereign buyers are waiting to scoop up every ounce they can get. It's a slow-motion car crash for the dollar, and gold is the ultimate insurance policy for when the wheels finally come off. Closer to home, the Australian dollar has been holding up surprisingly well. Our dollar is buying around 70 cents US, supported by the fact that we're a major exporter of commodities. But the local stock market, the ASX 200, has been a different story, hitting a 10-month low on Monday. It fell all the way to 8,262 points before staging a bit of a dead cat bounce on Tuesday. Gold mining stocks like Genesis Minerals and Evolution Mining actually saw some massive gains as the metal stabilized. Evolution Mining rose over 3.5%, and Newmont added more than 4.5% in a single day. It seems like Aussie investors are starting to realize that the miners are looking a bit cheap at these levels. But consumer confidence in Australia is at its lowest level since 1973 because of the fuel costs. It's a tough time for the average punter, but the resource sector is still the backbone of the entire Australian economy. Watch that 70-cent level for the Aussie dollar, because if it breaks, we could see a lot more volatility in our local gold price. Now, we can't ignore the Magnificent 7 tech stocks because they've been the only thing keeping the US markets alive. But the Mag 7 magic is starting to fade as investors realize that AI alone isn't going to pay the bills forever. Nvidia is still the heartbeat of the boom, with rumors of $1 trillion in demand for their chips through 2027. However, Apple is starting to feel the pinch because the cost of gold and silver for their circuitry has doubled in 2 years. They use gold in almost everything, and when bullion prices are this high, it eats into their profit margins like a hungry dingo. Tesla is also under the pump, with a valuation that leaves absolutely zero margin for error as interest rates stay high. We're seeing a rotation away from big tech and into global assets as the AI bubble starts to show a few cracks. If the Magnificent 7 continue to stumble, we could see a massive flow of liquidity moving back into gold as a safety play. The tech sector and gold are in a bit of a dance right now, and when the music stops, you want to be holding something physical. Keep an eye on those NASDAQ charts, because a tech crash would be the ultimate catalyst for gold to hit new record highs. Looking at the broader macro picture in the States, the US dollar index, or the DXY, is at a 10-month high. The greenback is acting like the world's safe haven reserve currency of choice, which is a massive headwind for gold. We also have a criminal investigation into Fed Chairman Jerome Powell, which has sent shockwaves through the financial system. Investors are worried about the independence of the Federal Reserve, and that kind of drama usually sends people running for gold. But the Fed is still staying hawkish, with many traders now pricing in zero rate cuts for the rest of the year. Higher interest rates mean a stronger dollar, and a stronger dollar usually means gold stays under pressure for longer. US GDP growth is still looking sturdy at around 2.8%, which gives the Fed more room to keep rates high. It's a complex game of chess between the government, the central bank, and the markets, and nobody knows the next move. But the massive debt levels in the US are a ticking time bomb that eventually makes gold the only logical choice. The macro events are pointing toward a very volatile second half of the year, so make sure your seatbelt is fastened tight. Alright legends, let's get into the nitty-gritty of the technical analysis for March 25th, 2026. On the 1 hour and 4 hour charts, we are seeing gold stabilize after that massive impulsive sell-off we had on Monday. The Relative Strength Index, or RSI, on the 4 hour chart is sitting around 45 to 50, which is fairly neutral. We've come out of that extreme oversold territory where the RSI was down at 27, which is a good sign. But on the daily chart, things are looking a bit more grim because a death cross has formed between the 20-day and 50-day moving averages. A death cross is when the short-term moving average crosses below the long-term one, and it's usually a very bearish signal. However, we are currently holding above the 200-day moving average, which is situated around $4,200. As long as we stay above that 200-day line, the long-term bull trend is technically still alive and kicking. The Bollinger Bands, or the BOL as the traders call them, have expanded massively because of the high volatility. Gold is currently riding the lower Bollinger Band, which suggests that the downward pressure is still quite strong. We need to see a reclaim of the middle Bollinger Band at $4,500 to confirm that the bounce is real. The volume was very high on the red days, which confirms that the big institutions were the ones doing the selling. But we are seeing a hammer candlestick pattern on the 4 hour chart, which often signals a potential reversal to the upside. Resistance is sitting heavy at $4,600, and will need a lot of puff to break through that ceiling. Support is firmly established at the recent low of $4,098, and if that breaks, we're in for a world of hurt. So, the technicals are basically telling us we're in a neutral bearish zone, waiting for a fresh catalyst to pick a direction. To summarize the main points, gold had its worst week since the 80s, but is currently trying to claw back some ground. We saw some very fishy billion-dollar bets on oil and stocks right before Trump's big announcement on Truth Social. Oil prices have crashed from $100 to $86, which has eased some of the immediate inflation fears. De-dollarization is still the big structural theme, with China continuing its record-breaking 16-month gold buying spree. The tech giants in the Magnificent Seven are starting to look vulnerable, which could eventually be a huge win for precious metals. Technically, the death cross is a concern, but as long as we stay above $4,200, the bull case isn't dead. It's all about the Friday deadline now, and whether the geopolitical tensions in the Middle East escalate or finally cool off. So legends, what do you think? Was that dip to $4,000 the bargain of the century, or just the start of the crash? Drop your thoughts on that big question in the comments below. I love reading what you traders have to say about the chaos. Don't forget to smash that like button and subscribe to Gold Jumper so you never miss an update on the shiny stuff. Stay active, stay legendary. Catch ya.